Welcome. Good morning, everybody. We've turned on the recorders, and it is Saturday, November 18th. This is our PUG user group. We're going to have a description. Today's topic is last conditional changes. So if for any reason many of you have not really come to use the last conditional change, it is a function that will aid in not only supporting where stops go a little better than other products that I've traded with. It also helps confirm breakouts based on closing action, and we'll define that in just a moment. Many of you are aware we are coming to Florida, our South Florida seminar, which is November 30th. And we will obviously be excited to see a lot of you guys and ladies and gentlemen, and more importantly, be looking to hear of how you're using the product and to help answer any questions for those that want to get more out of the person's lifetime package. So I cherry-picked one particular stock, Apple, of course. It's an interesting concept to look at, and when I say an interesting concept to look at, this year has been a fairly interesting market. And when I say an interesting market, because it hasn't, if we go back since the beginning of the year, January 2017, I think it's given traders pretty much a little taste of everything. It's gone from a trend conditional mode, a breakout after an earnings, which that's a monthly chart gap too, by the way, that exists way back there. Very unusual to see gaps not ever get filled, but needless to say, we've had run-ups, we've had run-downs, we've had sideways actions, we've had run-ups, we've had choppy conditions, and we've had deteriorations, and we've had breakouts. So there has been something here for everyone in this particular stock. So we're going to start with stocks, and then we'll start with other elements. And then notice on the chart here, I've got a bar chart. I do not have candlesticks, which we can turn that on just by the upper toolbar here on your screen. And that's just a function of TradeStation changing from candlesticks to bar charts. Now, whether or not you have the person's function, and so let's go and look at format analysis technique, and I'll share with you exactly what we have on this chart. We have the complete JP indicators, except for I have turned off on balance volume. You will notice the high close doji is turned on. Now, if you're not familiar with how to disable or enable those functions, just click on highlight on what the analysis technique is, and then just click on status, and it turns it off and turns it on. We have turned off the histogram. You will notice that we have the bearish LCC, it's turned on. We have the bullish LCC, which is turned on. We also have the low close doji, which is turned on, and everything is off. So basically, the only thing that we have on our screen right now is high close, low close, and of course, the last conditional change, which is today's topic. So if you change whether or not you have a candlestick or a bar chart function. Moral of the story is if you have the feature of last conditional change, high and low close doji, it will still be illustrated on the chart. And how do we illustrate that on a chart? Well, it's simple. Orange candle, and I'll magnify this up. A maroon candle signifies, or let's start first off with a blue candle. If it's blue or a blue bar, candle or bar, candle or bar. Here's the candle, and here's a bar. If it's blue, bright blue, it means it is we have labeled it as a doji formation. And so get back to where I was. I squinched up too much data. There we go. All right. So If it is a blue bar, it's a doji, and a maroon bar just signifies that this bar closed below that low. That's all that's identifying. When you look at markets, it sometimes may really be hard to see whether or not it did close or not. And in this case, if you note, and I'll get my view data window chart up so that you can see what I'm referencing. The low of this candle is 150.56. The next candle, which is maroon, the close is 150.55. Well, by 1 cent, it is lower. 1 cent. So that's a settlement price. Now, many of you by now have either read or understand the functions of high and low close doji. A low close doji generally comes at the end of an uptrend, not a downtrend. A low close doji at a downtrend just signifies that there was a period of indecision. The market closed below the low. Not a big deal to me. And this just may be illustrating it's a continuation pattern at best, but not a new fresh sell signal. The power of a high close doji or low close doji comes after there is an action. It creates the idea that there's going to be a reaction. In other words, after a long uptrend and you get a low close doji, it signifies that there could be the action was the uptrend, the reaction is the downtrend or a new trend phase moving lower. So with that said, when you use the high and low close doji, make sure that you're understanding the function that it reduces the probability of a low close doji after a significant downtrend that, in fact, you're going to see a new fresh sell signal. In fact, it probably is something that you want to kind of hang back and wait. And in this example, which is a beautiful textbook example, many things that I've taught about, is that the market the very next day forms an orange candle. And what the orange candle signifies in the person's lifetime is that the market closed greater than the doji high and formed a high close doji. Now this is where we get into the concept today in regards to high and low close market conditions above and beyond or above or below the last conditional change. So what is the last conditional change? The last conditional change in TradeStation is simply identifies a particular candle or bar that closed below a significant prior bar low. So therefore, in this case, instead of having the exact, as you can see the gray lines right here, and let me just pause for a moment so I can turn on the drawing tool. 1 second, please. All right. Now, this is the gray bar that I'm referring to. Since this was a swing high, what we have found and did a little bit different is we programmed in the highest high versus the absolute high. So there's an added function of what's called filtering out a significant last conditional change. What is last conditional change? If a market goes up and goes up and goes up, but yet if the market trades down and goes below a prior low, but does not close below a prior low, therefore it's not a new conditional change. The trend or the newfound potential trend is still intact. Market closes inside a prior bar's range. What we're concerned with is a new last conditional change. Does the market close above past or prior highs? If so, the bar that breaks out and closes above the past or prior bar, that now becomes significant support. And that support stays intact until a new support is formed. And if you note here on the way up in Apple, at least in this example or this slice in time, the market created a higher close above this high. We do not consider that, as since it's one bar only and it literally could be a key reversal. We use the last conditional change as the swing low, and that would be why we have the last conditional change formatted down here. Now, if you get a buy signal, so for example, here's a buy signal. This is the same situation as here. Note that this close is greater than the last conditional change, but the prior high, but note that we put the white line underneath the swing low because it's the greatest of the two values. So until we generate a new last conditional change. And where do we generate a new last conditional change? This bar right here closed greater than that high, but notice what we have. There's your last conditional change. So in essence, what this is designed to do is to say, listen, I think Apple might be a buy. It's got a significant downtrend, but I don't want to just buy any old place. I want to buy if the market breaks out above a last conditional change. And so more importantly, it helps us to identify potential confirmation of breakups and strong momentum. As you can see, the gray line right here, the market closed. I'm circling the close, and I rectangled the last conditional change. It closed greater than the value of the 2 bar, which gives us that last conditional change. Again, gray is a bearish last conditional change, and white is the bullish last conditional change. So in this example that we see, okay, we have a new momentum shift in the market by the nature of 2 factors, 2 functions. The first function is that the market formed a high close doji. A doji after a downtrend, and the market closed greater than the high of the doji. There's your number 1 setup. Your number 2 setup or confirmation or filtering that this is a higher probability setup is that it also closed greater than a last conditional change. So as the market immediately starts to form a higher high and a higher low, the very next bar, we still have positive things happening, close greater than open, but we did not form a new or create a new change of last conditional movement. The last conditional movement comes right over here. What that signifies now is if you are long on the close or the next session's open and you have a stop loss. X represents stop loss. So once again, let me go back and make sure that I don't confuse with too many drawings. Long entry on the close or the open. So we'll talk about how do we get notified about buying on the close. And then generally speaking, the next day we get gap higher, right? So we'll talk about that in just a minute. But you get a high close doji confirmation, you run your scans, you find out, hey, I like this, you look at the chart, and the next thing you know is you go, I'm going to get in on that tomorrow morning. We'll see how it opens. My stop goes below the low of the last conditional change. Entry, long, risk factor, below the last conditional change. Now, in my previous studies, and this is not a high and low close doji session, but I will just point out that typically what we would normally see is a 1-to-1, the distance between entry and stop. That's the risk. The measurement of the risk, usually the profit objective. So if this is A and this is B, then C, the risk-reward ratio. AB is your risk from entry to stop. BC is the profit objective. It would generally take between 8 to 10 bars to get to that number 1 primary risk-reward ratio. So, I mean, this is not a chart that is something to cherry pick too much with because it's recent history, but if we go back and we say from bar 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost within that 8 to 10 time period bar, the 1-to-1 risk-reward ratio was the objective was met. Now, if that's a daily chart, a 5-minute chart, a weekly chart, you know, it's not to say, by the way, it's not to say that the market can't even go higher, or it can't say that it could happen immediately, and it doesn't say that it may not happen at all and lose. But the key element is when we're looking for confirmation of a trade, how do we look for a higher probability of a market that may have stronger momentum? When we look for high closed dojis, we look for those breakouts above the bearish last conditional change, and then the stop goes underneath the current bullish LCC. So we have a long entry, and as you can see, nothing. We have new last conditional change, new last conditional change, and now new last conditional change. We use these as places to reduce risk on either A, when a market gets up near a initial profit target that we can now use to scale our balance or scale out of our trade. And in this case with Apple, as you can see, here is a last conditional change, last conditional change, last conditional change, and on this bar, it would have stopped you out on the open had you had your stop below the last conditional change. Next thing you know, the market moves sideways, nothing happens, and then we get a breakout, a close above a last conditional change. And if you chose to buy that, your stop would be placed below the bullish last conditional change. And so this is looking at a particular trade in the market of how we utilize last conditional changes. Now, I'm going to switch to something because this is, many of you that are in our trading community know that at least with the biotech sector, and actually you can go back and check the tweets that we send out. We did generate several weeks ago a bearish trade signal. Now, I do not have PPS overlaid, so let's take a look at format analysis, and let's turn on our triggers. So we're going to turn on our triggers, and I'm going to turn on the moving averages, the status bars as well. Okay, so we did identify that we had picked up scans generating sell signals back in October. I think it was the 12th or something of that nature. We had inverse leveraged biotech buy signals. We had all types of ETF sell signals generated here. And one was, what was really unique about that situation was not just the fact that it generated, and I want you to focus in on this pretty significantly, because this is a real-time analysis that we gave for our traders in the trade community. Number one, it generated, here is a doji, it's bright blue, but notice 1, 2, 3 bars go by and it never closed below the low of the doji, so therefore it didn't match, or the significance of a low closed doji never took place. So what happened here is that we generated a sell signal, and the close, if I may be so bold as to highlight this a little more, you can clearly see that after we generated a sell signal, a PPS sell signal as indicated by the arrow pointing down, the market actually closed below the last conditional change. So you would be looking to enter a short position if you were, or if you were long the market, you should have been out. And the newfound risk factor was the gray line in the sand. So this was a bona fide sell, and that was the risk factor. It took a little bit of time And one of the things that we pointed out to the room is if this market closed back above that, this would have been maybe a continuation. Instead, the market continued to trend lower. Now let's take a look at the last conditional change concept and say what happened in the marketplace. So this is something that you are going to want to focus in on, since right now we are in a major uptrend in most of the markets, and we are at, I'm not going to say for some stocks historic highs, but for a majority of stocks at historic highs. But the characteristics of looking at markets when they start to roll over or maybe correct to the downside, we would be looking for kind of combinations either for low closed dojis, PPS sell signals below last conditional changes, and then the third and final kind of concept is to watch for the moving averages, because it may be hard to see in pricing, but the moving averages as they start to trend lower over time. Remember the old phrase that tops take longer to form than bottoms, and so we typically get V bottoms and rounding tops, and kind of funny that looks like a rounding top. One of the things that we avoided the biotech area like the plague, so to speak, no pun intended. It's kind of ironic to use that phrase for biotech. It's supposed to cure the plague. Is the fact that the market still never maintained, and it may be hard to see this, but the market never maintained closes, and it never took out the last conditional change bearish line in the sand. And we started to see the bearish conditions still maintained. So this is a kind of a structural observation to help traders to understand the market's job is to bore us, to scare us, and maybe there's a delayed reaction. And we have to make sure that we monitor conditions very closely. And if we are looking at the last conditional change relationship, are markets taking out last conditional changes? Are they remaining below a prior last conditional change? And so that way, as you start to say, wow, we have more closes underneath the last conditional change, the bullish one, which signifies, and let me just share this with you real quick. This may be a little bit of devil between the details, so to speak, but if this white line in the sand, if I can draw that straight, white line in the sand, since the sell signal, we generated more closes below that support only one day, and the very next day it just slammed and maintained underneath that last conditional change. And now we started to see a new phenomenon. The market started to maintain open closes and highs, lows below the moving averages. Now what happens is we start to see a more definitive trend. I'm not talking about relative strength yet. I'm not talking about on-balance volume or volume trend conditions or the person volume indicator. We're just looking at pure price is how it relates to the actual price and these points of interest called last conditional change. So when we look at this and we go, all right, so we haven't taken that area out, but we're spending more time breaking down. And all of a sudden we're breaking down. We form a new last conditional change. And the very next candle forms a new last conditional change and a new one and a new one. And here's a last conditional change. Now, the market spiked through it, but never closed back above it. So that is something that it's not been perfected as far as an indicator to say, hey, where do we place our stop? I mean, I think in a situation, and this might be helpful for everyone to understand, if you have started to develop a trend in the market and you have a last conditional change here and you have a newfound last conditional change there, yes, maybe move your stop. And if you're short the market from here, obviously that caused the market to, that spike caused you to be stopped out. But certainly nothing to illustrate a new buy signal. So let's move forward, because this is very imperative, and this is exactly, even though, and I know some of you in the room today were in the trading room, and you know we covered this real simple. we would not be entertaining, not even a chance of entertaining buying the biotech until it closed. Even though this is a high close doji, it's blue, it's orange, it's got a PPS buy, it couldn't close above the last conditional change. So therefore, I'm not saying high close dojis, they don't work all the time. They used to be around 72%, and I think in this environment, they're more like getting down to like 65, 62, 67 in that range. I think someone sent me a file that they saw that was 60. It's losing its percentage in this environment, which is kind of nice to see people follow through with our work. The concept, though, is that until you get a breakout over last conditional change, until you get confirmation of a close, a breakout over last conditional change, it's going to be probably a less than stellar or a lower probability situation. Now, the other day, if you noticed last week on Thursday, the market generated a PPS buy signal and closed greater than the last conditional change. And ironically, it had follow-through strength the next day. So we'll see if we get a continuation of an upside move in biotech based on that little keen observations. Now, how do we utilize a price movement situation off of key support resistance and key support resistance as identified by last conditional changes? Well, obviously, if the market is trending lower, the last conditional change, if you're looking to buy and buy a pullback, you want to wait for that market to break out and close greater than that. You can also look to maybe see if there's additional information in the form of volume. Now, in the spirit of curiosity, let's go to Format Analysis Technique. I'm going to throw up my volume indicator. I'm going to turn status on. I'm going to throw up the on balance volume and throw the status up. I have to go to Status Analysis. I have to go to Format, Automatic Scale Range, OK. Volume Indicator, Format, Automatic Scale Range, OK. All right. So the irony is that we have a scenario in the biotech right now where we did get a secondary lower low in the marketplace, a secondary lower low. This is the primary, and this is a secondary. Now, what I like to see when you get these types of secondary would be more of a bullish convergence pattern in the market. The special volume indicator in terms of percentage started to show some strengthening in the momentum loss. In other words, as the market was going down, the momentum of the volume was not increasing. So it wasn't getting ultimately bearish. So we did see over the last 3 days an uptick using OBV, and we did get a moving average cross and an uptick using the volume indicator. The fact that we did get and generate a close above the bearish LCC is a positive indication, and we may see some follow through. Where? Well, obviously, the last conditional change area, which offered or acted as significant resistance, might be from 311 somewhere back up into that zone. And then if it closes, X means closing or stop. If it closes over there, it means that we can probably trade back up again. So this is how I've been utilizing this through my career and utilizing it more successfully in this market to help to confirm situations or setups in the market. In fact, if you go back and take a look, one other concept that I wanted to address in today's segment, and this is more of a lesson on how to use last conditional change that's available on the person's lifetime package. and it's probably one of the best of the indicators. And I'd have to say PPS is more prominent of a market indicator because the arrows show up more than a high close, low close. So in order of importance, I might say A, it's the high and the low close doji. B, it's the PPS. And let me reemphasize, you don't get a lot of high and low close dojis all the time, so what's more important, the PPS indicator or the high and low close doji? If we sit around and wait for a high and low close doji, we may sit around and wait for a while. But as you can clearly see, we've generated a lot more PPS sell signals that define downtrend, PPS buys that define buy signals. We also had a corresponding HCD. This is an LCD. This was a high close doji that didn't do anything. This was a buy signal that did something. This was the PPS. So in looking at a slice of this example, what's more to you, or at least to me, what's more efficient or gives better trend reversal signals? And it would be PPS. So the order of importance would be PPS. The order of probability of making an upside move is the HCD, LCD. Next, in the order of importance to me is also the last conditional change. So the volume and the volume indicator and relative strength tools, they help me as an additional filter. But when we get a move in a close above a specific resistance area, it gives me a little bit more heightened credibility, or gives me a little bit more confidence that that market is now broken out of a significant resistance. I don't teach this often, and I promised the folks in the trading room this week that I would cover it today. So this is another function of the last conditional change of using as confirmation of buy and sell signals, and it's been very effective tool in as far as reversal of trend identification. This is very important observation. I repeat, this is a very important observation. When we get a bearish last conditional change, which is a resistance, and a bullish, old bullish last conditional change, resistance, support, and the market trades below both. When it gets back through the bullish and the bearish, it gives me even more confidence that the market is broken out of older chart point resistance and old chart point support. Example, this is older resistance, this was older support, and the market closed through it and blew right through it. The same scenario exists right now in the current example I'm giving you. A bearish last conditional change and a bullish older support. The support failed, we had a resistance, and now we are blowing through by closing greater than both of those two values, and it gives me the idea that the next thing we're going to probably come up to at least test is that line up there in the sand, and then we'll see what else transpires. Again, when we get a breakout of an old LCC bear and bull, it gives me a more important confirmation that the market is now ready to break out. Now, we did this in class the other day. I'm going to put up the E-mini S&P. So for day traders, this might be a tough example. I know there's data available for the E-mini S&P. Well, let's do it another way. All right, so let me turn off a few functions here. First off, I'm going to turn off to give us more room on the charts, on balance volume. I'm going to turn off the histogram. I'm going to turn off the volume indicator. All right, and so this is, why do I'm leaving this as a 15-minute chart. Why is this a tough example? Because the E-mini S&Ps, first and foremost, have been in a pretty erratic range lately, and many of you, if you are day traders, do realize that. ES has been in, and right now we've seen an increase finally in average true range over the last 10 days. We're now up to 16.5, but back in October, we were more like in a sub 10 daily range, and that includes the overnight session. This is a market that has become, as you can see, while we have a range from 75 to 85, a 10-handle range, most of the day, as you can see in the U.S. Open Outcry session, we stay in from 79 to 82, a 12-tick range, and then finally something happens. So, I mean, I just wanted to make sure that everyone, when I define that it's been a challenging market environment, if you're trading from 8:30 Central Time, and there's your last conditional change, and there's your last conditional change support, this is your daily trading range in the market, and I'm laughing uncontrollably because I couldn't have picked a worse market in a trading environment of which we're in right now as far as day trading. And you know, it's not just S&Ps, it's gold, it's bonds, it's almost all the markets right now, which is another reason why many of the banks and reported earnings that they're trading, their trading revenues that they make from trading, is suffering because there's really nothing to trade. We went through this exercise the other day in the trading room, by the way. I mean, we went even down as far as to look at coffee and cotton and looking over the last 3 months in markets that would typically move, that just are stuck in a really tight historic range, a tight range from a historic standpoint. Anyway, let's get back on subject and look at the last conditional change. When we have a support and we have an over resistance level and the market's breaking out, when it breaks back through the old resistance and the old support, you have better confirmation. Again, when we have an old resistance and the market is breaking out, it is giving you confirmation off a buy signal that there's probably more upside coming. Now, the E-mini S&Ps, in one of the areas that we would say an old support resistance combination, and let me just highlight this by format analysis techniques, and I'm going to get rid of the daily pivots so we don't have too many lines on our screen. Just hit status, and I'm going to go to bar chart. Might be a little bit easier to see with the green and the white lines rather than the multicolors. So here's a great example. It's a little early in the morning for some folks, but we generate a sell signal, but we don't close below a last conditional change. So even though that is a algorithmic sell signal, and then here's one where at 2300 hours, it does generate a close below a last conditional change, and the very next bar is straight back up. So that would be a situation where if short, you would have been stopped out. But as you can see with the last conditional change, this is old resistance, and new support until, and this is a great example of the topic that I'm referring to. When we have old resistance and new support, until that market closes below that, it is going to act as significant upside or support. Again, that combination of here's an old resistance and this support, when the market gets back through that level, it's going to act as a efficient momentum change. And so I think everyone should focus and have, if you do not, and if you have not had your last conditional changes up on your screen, or you're not familiar with them enough, they are extremely dynamic spots to say, hey, until we actually get below, and here's a situation where, you know, it may trade at, again, 3 in the morning, but never closes below that line in the sand. And we get better confirmation. I mean, holds support. So many people may be a little anxious to sell the market, and until you actually break or close below that line in the sand, and even for day trading in the room, I put up these lines, and a lot of people that have been around a long time are used to it. Newcomers are kind of like, I generally will put something out that if we close below that line in the sand, then I would see the market coming back down to, you know, and I'll put an arrow on the chart. So if the market closes below a certain level, I give a target area of where the market might come to. And my targets are either old support, resistance, support on last conditional change, because the markets are like magnets. They like to revisit old levels. So again, a last conditional change, when you get a trend change in the marketplace and you close and you break below supports and you go down, now it's our job to identify by looking left, was there older support, moving average crossover, what was over there that may cause the market to stall. Again, this is a 15-minute chart. Market closes greater than a last conditional change on a PPS. The market comes down, doesn't take out the area of where your stop should be, and then the next bar, it closes back up, forming a new last conditional change. The market goes up, forming a new last conditional change. If you notice here on this 15-minute chart, based on just that little signal, there's your entry, there's your stop, the market does go up. And unfortunately, if you notice here, we didn't close, we don't generate a new higher last conditional change than that one bar. What's the job of the trader? If you generate a buy signal at 89 and the market jumps to 93, obviously, you know, this particular market environment where we have a narrow ATR, the identification of these last conditional changes are just helping us identify very important points of interest based on a chart, on a candle that broke out. A close greater than past or prior bars should initiate more follow-through momentum. It doesn't. It fails. So as a trader, especially a day trader, looking for a great signal, an entry is one thing. But once you're in the trade, now what do you have to do? Well, obviously, micromanage or use an automated system that can help you generate an exit strategy or trailing stop feature, et cetera, et cetera. But I wanted to make sure that today's topic covered the last conditional change feature, which is on everyone's lifetime package. Whether it's a monthly chart, and let's go over here and get rid of or turn off the pivots, and or a 15-minute chart or a daily chart. I mean, we can take a look at the concept between breaking out over old resistance, last conditional changes, and until the market closes underneath that line in the sand, closes. You know, it's kind of interesting. If you look at my work in the weekly thoughts and observation, while yes, we've given it a couple shots of some small option trades, you know, the funny thing is this year, which is probably one of the first times in, I don't know, since 2010, that the last time that I gave an absolute trade for a potential short in the market was back in February. Isn't that wild? So at this point in time, we have a different story. So all year long, I've not really put out, hey, time to sell this stock, get short this stock. Most of the picks and everything that I put out in my own weekly thoughts and observation have been long trades. The market is, and it's been a very, I'm not going to say unless it's just been Amazon and other markets, it's been a pretty significant market in the terms of what I'm drawing here, sector rotation. They don't like biotech, and then they like retail. They don't like energy, and then they like energy. And they like NVIDIA, and then they don't, and they do. And they don't like Tesla, and they don't, and they do. And they certainly don't like Chipotle Mexican Grill. They liked AT&T, and then they don't. I mean, so this has been a very, they didn't like Johnson & Johnson, and then they did. I mean, even Johnson & Johnson was a stock we tried to get and missed, I think, by 47 cents on a long entry on a weekly advisory service, but at least pointing out of the very nature of certain things. So this year, in looking at the market, at least from the standpoint of last conditional changes, when we broke out, it has been just one after another, after another, after another. Now the question begs, at one point, you're going to get one of these bad boys. I mean, we will get one of those bad boys, and I will have to say, while the last conditional change has been doing a great event, keep in mind other indicators are kicking into high gear, such as a loss of momentum, et cetera, and things of that nature. But looking at the overall on a shorter term time frame, and this would be a weekly, and let me get rid of or turn off the pivots just a second. And I'll format analysis, and I'm going to turn off the commitment of traders report, which, by the way, before I do that, if anyone's interested, which is kind of a scary, spooky situation, did anyone seem to finally notice that the small speculator, which is green, and let me just show this with you by nature of the, turn this off, turn that off, go to resources. I mean, you can see it here, but I want to confirm it over here as well. This could be kind of scary, by the way, for those that are aggressively long the market. From almost, and this is what the chart represents, this is the first time this year that the small speculator, I don't want to laugh, but the small speculators are for the first time long the market right now. Okay, so when I say last conditional change is a great setup for pricing and for confirmation of signals, technically speaking, there are other indicators. And I just wanted to bring that to your attention. This is a net long. It's not a great net long, it's neutral, but it's a psychological change of event. And it is evident by looking at your, on your person's weekly charts It will only work for commodities. So if you put up spiders, it's not going to show because spiders is not a commodity. This is the Commitment of Traders report. In the Commitment of Traders report, green represents the small speculators, and blue represents the hedge funds. Red represents the commercials. So pretty much since about here, since December of 2016, I'm just pointing out as a contrarian indicator, and we'll turn the status off. We're going to format this bad boy just a little bit for everyone. And we're going to format, we can't do on ES relative strength because it's taking relative strength of the S&Ps to the S&Ps. So we can, I'm not going to close it out. We're just going to minimize it just a tad, gang. So not that I wanted to give a live trading lesson or anything like that, but I think it's neat to use the tools in a real-time environment situation. So since approximately last year, which was the beginning of December, the small speculator has been short this market. And I mean, if we take a gander, they've been short this market up until Tuesday's close. Tuesday's close, they finally covered all their shorts, and as a group, an entity, they are now net long. So from here going forward, hedge funds are starting to liquidate their long position. The commercials did not add to their hedges. It's just the small speculators got squeezed so bad that now they are out. So here's another interesting fun-filled observation. In the person's market catcher that Pug VIPs have, the change or momentum percent of the market is showing a little bit of divergence finally on the weekly. Now, how does that play into our topic today, which is, of course, last conditional change? So I pointed out there are other tools that we could look at. And ironically, what we would be looking at is obviously when we've gotten low closed dojis like the last time, the market did go down. So if you look at the low closed doji, the purple candle, which you can't see because I made too many colors, so let's do it again. So from the last time we had a low closed doji, from the close, there was follow through to the downside, slight follow through. Not great, but there was follow through. Here was another one, low closed doji, and we closed underneath the white line in the sand. And what happened? 1 and 2 weeks, we did go down. There was loss of momentum. At that point, that's when the small speculators went the shortest ever all year. So they went real short here at that price level, and we'll say it's around 24.15, and the market's gone to 25.76. I would say that the money is run out. They have probably run dry on financing that uptrend. The key element is that all of a sudden we have now, and I'm not saying the third time is a charm, once, twice, but that's a 1. Once, twice, third time the charm, but something's uniquely different this time around in the sense that the small speculators are now net long. They're not adding to shorts. They're now net long. And there is a volume divergence pattern in the market. So the last conditional change really comes into play in a huge way right now, because now the market is, and if we get another week, and I'm not sure where we are between Tuesday's close and Friday. Remember, this information is as of Tuesday's close and was released Friday. So if we get one more upside or another week of upside, because everybody knows that the holiday of Thanksgiving, the day before Thanksgiving, the market goes up a bit, and the day after Thanksgiving, the market goes up a bit. and if they add to their longs over time a sell signal. Now remember, a doji is a warning shot of indecision. A low close doji would happen between 1, 2, within 3 bars. We've got one out of the way. So within the next 2 weeks, if they feel comfortable to add on to their position and volume doesn't seem to increase with that, and we watch commercials and hedge funds, if change of ownership goes into the hands of longs at the highs to the small speculator, then we're more than likely getting ready for a big rollover. Within the next 2 weeks, there is a big event that's coming out. It's called the FOMC meeting. Janet Yellen may decide finally to raise rates for Christmas and give everyone a quarter-point rate hike. All right, so I'm looking at this and I would say, how the heck do I trade this, John? What is this? Well, obviously a low close doji, a close below the low of the doji, and that last conditional change combined with the condition of the market of specs being long now and divergence in volume brings me to maybe an idea that the market could get back into an area of old resistance and support. That would be the logical thought process that would go through my mind. In the meantime, I would change that and go to a daily chart. And so with a daily chart, I will be watching, since the small speculator is now net long the market, and I will be watching for, and again, if this was Friday, that was Thursday, that was Wednesday, this was Tuesday. So since Tuesday, the market is about exactly where it was, where they went long. It didn't really change. They're probably not scared. Market may give them a little something to feel good about. But here's the key that I am looking for. Number one, on using the last conditional change type of technique. So let me get this up and share with you what would be an important scenario. So we have an old resistance and an old support. And in that kind of concept, if we break down below that line in the sand again, if we break down below that line in the sand again, and we start to break down of that level, then to me, the next line in the sand are these old levels. You can see them in the charts by the nature of the shadows as well as kind of like a support zone. And if the market breaks and closes, keyword closes, not trade below them, closes below them. If it closes below them, that's a CLOSE, that's how you start to look at the market's dynamic shifting. And you all can already kind of see the shift. It's not really in a true trend mode right now, right? The last conditional change, it's in a trend mode. And I mean, last conditional change doesn't close below it. Last conditional, finally got to close. What that signifies is that there is finally, since over here, that's back in late September, a kind of a difference of market conditions. So the market on a daily chart is warning us that it's not making newer breakout highs, and it's starting to break down on a closing basis of support. In fact, even though it closed underneath the last conditional change, one day popped up, it had no follow-through. So maybe the market's going to chop around and just sit here and do something like biotech did, which was bore everyone to death and make people feel warm and fuzzy and comfortable. We want to see if the same concept as biotech and the reaction of price to the last conditional change starts to occur, which is the market starts to close below more multiple times the last conditional change. And if it does, it will more than likely give you the early warning of a market breakdown. So that's how I utilize the last conditional change, whether it is utilizing it on a day trade with E-mini S&P, a swing trade on Apple, running my scans and saying, by the way, Akamai Technology last week, what prompted me, one of the trades that we even stalked in the trading room, which became a thoughts and observations trade. See the gray line in the sand? That's a last conditional change. The market closed and broke out over the last conditional change. It's got a strong support. What did we do? We bought the pullback and then made some money. So again, last conditional change. Now, had we gotten in a little early, a last conditional change breakout over here, and then it comes up into resistance. Those are the kind of, with an improved relative strength and an improved volume, and then we got some upside. So I'm sharing with you in real life how I utilize the last conditional change, number one, and how I absolutely TSCO was another one, by the way. Tractor Supply. So when I get these little buys and these breakouts, format analysis technique, and I'll get rid of the pivots so that you can see this a little clearer. So when you get a buy signal and it closes over the last conditional change, then you get an improved relative strength and improved volume. It definitely gives us a higher, and you can see the last conditional change moves. So when we get those little moves, or you get a breakdown and a buy setup, and you can buy the pullback, all the power to you. So it definitely gives you, and then last but not least, one that I joked and earlier this year we bought, if you look back on a performance, and it's embarrassing, but at around, I bought in Restoration Hardware for the same darn reason last February. Inside of the market moving up, it was an earnings situation and Restoration Hardware. We made a little bit of money, and then it went up, and then I lost track of it, and then it broke last conditional change, and then again, key element, a breakup, an earnings. This is while it looks great getting here, this, I'll be honest with you, and looking at the close over the last conditional change, it's really hard to go long here and place your stop loss there. So, early in the phase of a bull market, or early in the phase of a trend line or a last conditional change breakout, I'm just here to say, here's a trade we made money on. Chasing it and taking extra risk. Again, the key element is to look for opportunity, and how do the tools that we created work better to help traders make better informed decisions. This is not a relative strength, MACD, moving average, Bollinger Band, Keltner channel, squeeze, whatever. This is pure simple price action breakout of old last conditional change, and you can say, I want to get in this trade, and there's my stop. I like that. And if you get an immediate reaction, you can either trail it, scale it, do whatever you want, fade me, stay with it, John's getting out, I'm holding on, whatever. It all works. Anyway, but that is another trade, that example of what we look for, and what I look for in how I use the tools, how I designed them to work. And the last conditional change is probably the most underrated, most powerful tool that you have in your arsenal of the many that is available in the person's lifetime package, which is why it's called the lifetime package, because I firmly believe there is nothing else that will help you in your lifetime of trading for making informed, great trading decisions. That concludes today's session on our PUG meeting with the last conditional change, how to find them. They're already built in. If you just go to Insert Analysis Technique and you've deleted it, scroll up till you find JP, and they're right there, LCC bearish, LCC bullish, and you will come to more than love how that tool works extremely efficiently. thank you all very much. Have a great weekend. And if we don't see you in the trading community next week, please have a wonderful Thanksgiving with your family. You know, I don't want to share any funny stories about guys who drank too much and the wife tells them to take the turkey out and they throw it through a window. You know, those are like high school stories. But anyway, everyone have a good time. May God bless everyone. God bless America. And I appreciate everyone for being here and spending the time with this Saturday morning to help enrich your lives using what I believe is a fantastic tool. Thank you all very much.